morning, everybody, and welcome to the Friday edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson, here to do what we do each and every day on the Daily Market Commentary. We look at 10 to 12 futures markets, identifying potential turning points and breakout trades as they happen. For those of you new to the channel, make sure that you click the subscribe button below. And for those of you not new to the channel, hit that little thumbs up button there to give me one of those much appreciated likes. Let's go ahead and dive right in. So yesterday we had a little bit of a rubber band kind of day, right? Where we bounced around, came down, came back up. So the S&P today is down 3.5 in the morning trading, and we had a breakout trade on this little level here. Now, let's talk about this for a moment. We broke out from 26.10, 26.11, all the way down to 25.91. So that is about 25 points on a breakout of the S&P. In the Nasdaq, which is the one that I had talked about, I said I like the Nasdaq as a better breakout opportunity. In the Nasdaq, we broke out from 66.30 all the way down to 65.44. Now, but when you look at it, you say, well, that was a failed breakout. Remember, we're day traders, guys. We're day traders. That I do this video as a short time frame trading opportunity. Would you consider a 50-point Nasdaq move a failed breakout? I would not. Matter of fact, I would say that this worked perfectly, and it came right to our opposing fair price value area, which, we've got one right here. We've also got one right here. And this is exactly where my feeling was the price would come to. Now, I'd love to tell you that I went long right here and I caught it on the way back up. Absolutely not. That was not in my plan. I didn't have a line drawn for it. I was able to capitalize on the short. Looking at the small time period, though, one of the things that's important is though I believe that set it and forget it style of trading is a very powerful way to go. When you have a lot of areas and not a tremendous amount of what we call room to roam, you may want to take your stop and adjust it. And that's exactly a way that you're still going to catch the big thrust of the move in this huge move down right here, but you'll get stopped out on one of these pullbacks, right? And one of these pullbacks might stop you out, so you may not catch the whole move if you're continually moving down your stop to lock in some profits. And that's kind of the case on a trade like this. And once again, this is where we look at, what are the results of the daily market commentary? Well, it depends on how you manage the trade, right? How you manage the trade is really what's going to determine the outcome and the results that you're going to get out of that. Now, where are we for today? So we've got to remove this line here on both of these markets. We rallied back hard yesterday, but did we put in a higher swing high? No. Matter of fact, we put in a lower swing low without putting in a higher swing high. And I would caution many of you that on the hourly chart, we have a very strong downward presence. So let me turn my line back on here. Now, this is, this is really, if I connect my trend line, right? 3 points, 2 points to create the trend, a third to confirm, 2 points, and I don't have the third yet to confirm on this downward trend line. My range is widening out on this. You can see that my range has widened out a bit, and I definitely have lower swing lows and lower swing highs. So technically, on the hourly time period, I'm in a downward trend. When I look at the 4-hour chart, lower swing lows, lower swing highs. Same thing exists on the 4-hour time period, right? Lower swing lows, lower swing highs. So what are we going to get today? Well, there's a good chance in my mind, and I've seen a lot of people say, well, expect yesterday's move to continue. I think that there's a chance we roll over from here and we continue to fall. And the reason being is that I'm just following the trend of the time period in which I happen to be trading. I trade primarily in the 1 hour time period. We certainly look at the 15-minute time period as well for smaller opportunities. And on the 15-minute time period, am I in an upward trend? The answer to that would be no, right? Even with this huge move back up we had yesterday, I'm not in an upward trend. So my trend direction, because trends are defined by swing lows and swing highs, my trend direction is down. Even with that humongous rally that we had yesterday. Now, one thing we can also look at to kind of confirm that is, let's go and add futures, my volume down below. Now, I'm not a huge volume trader, but I do want to take a look at the fact that as the markets were selling off, my volume was up here. As the markets rallied up, my volume was down here. Now, you got to think, this and this look very close to one another, but let me expand upon this a little bit. On the way down, my volume was right up here at around 100 and let's call it roughly 120,000 contracts. While we were rallying back up, my volume at one point was 40,000 contracts. So while this line here may not look it, this line represents a third of the volume of this line up here. Here we're at about 90,000 contracts at our height on a way back up. So if I look at this, our moves down are accentuated with higher volume. And that is a bearish volume signature, all in all. So keep that in mind, as we're looking at this. So what do I have for today? Well, what do I have for today? For today, what I'm looking at is I may have a potential breakout of this trade one way or the other, right? So whether it may break out to the upside, it may break out to the downside. I'm actually not going to set a trade up right now. I'm going to look at it a little bit later and see, are we going to bounce a little bit? Because there's a little bit of room to roam on both sides. But what I've seen is when you've got a little bit of room to roam on both sides, this is what lends itself to false breakouts. This is what lends itself to, okay, I'm in, I got long. Oh crap, I got stopped out of my long. Now I'm short, and then boom, it shoots back up, or the other way around. And I'm not so sure that I want to try to guess that. Right? I've got a couple of other opportunities in this market, and I think I'd rather take those. That goes for the Nasdaq as well. In both of these markets, I'm probably gonna look more. I've already got some existing positions in play, and I'm gonna leave those in basically where they are. Next, crude oil. So crude, we've come back to this area again, but we were unable to really get into there. I switched it to a dashed line yesterday when we came close to entry, and we were unable to get filled. We still, even if had I not switched it to a dashed line, this wouldn't have counted as an entry because we didn't quite touch it. Right? It is literally it missed it by about 3 ticks, so you still would not be in this crude oil trade. But there's nothing really to add. I've still got my levels and my lines in place. Gold. Now, gold was a stop out, no doubt. Gold came up, hit us the stop out. And by the way, then it started to work the way that we thought it was going to go anyway. So now, depending on your risk, you may or may not have been stopped out, right? Because, I mean, from here to here is less than a point. So if you gave yourself 2 points of risk, then you didn't get stopped out. If you really kept a tight window, then you did get stopped out. So once again, it depends on your risk tolerance as to whether or not you got stopped out. I'll take a stop out in gold and a 50-point move in the Nasdaq, or a 25-point move in the S&P, or something of that nature. And if that happens, that happens. And I tweeted about that yesterday, that the NQ short was working out great, even though we may have gotten hit in the stop out in gold. Yeah, you may not have been stopped out in gold because it may continue to be working in your direction. So I'm not going to do too much extra today on gold. Next, let's look at the bonds. Bond markets. So our bond market area price did come into the zone. We have not gotten much of a move out of this. So we did get our touch into the zone. Our supply-demand area price has come out of it, and it's not really doing a whole lot. So here's what I would say on this. If you're short and you're in it, you can manage your stop effectively. Move it down a little bit if you so choose. Take a little off the table, but when we get a trade into this area, I want to see a nice move out for a confirmation that it's working. So what I'm going to do is I'm going to remove this. This level is no longer valid, although the trade is still working out, so that could still come down. If you're not in it, but you think there's room for it to fall, well, just take a breakout below this area here, right? Maybe you've missed the entry, but if it does start to fall, you can take the breakout below 119 and then just catch it as it's dropping, right? And pick up some move on that base. Next, looking here at our Aussie. So the Aussie market, we had talked about a potential breakout above this blue line here. This is a touch, and as this one did not work out, your stop would have to be below here, as this one did definitely shake us out on that Aussie side. Next, the euro. So the euro is bouncing around in here, and there's a number of different things you can do in this euro. Looking at this on the 4-hour time period, we're sitting right on top of this area here, and this is what I had spoken of yesterday, that if we break below here, there's room for it to continue to roam. Looking at it on the daily chart, we have a little area down below here that definitely could stop it. And this is something that one of my friends, Dennis, had sent a message about yesterday, was this daily area down below here that could stop it from going any further. And this definitely could, no doubt. So make sure that you follow your own rules on risk tolerance and something like that. But I think that even if it does, let me wrap some lines around this. So let's say that you are concerned about this area here, which is for sure our daily area. When I look at that on the 1-hour chart, a break below here down to this 119, there may be enough profit for you in there, right? It depends once again on what you're looking for as your goal. This is the daily area down in here, those two lines. So take a look at that, manage your own risk as need be. We're definitely in a downtrend on the hourly chart, although my downtrend has definitely shown some weakness as of late because we've started to go this bit of a sideways transition. Looking at the Canadian dollar, remember we're still in the hockey playoffs, so the Canadian dollar is not going to go anywhere. Everyone's too busy watching hockey. They have no interest in doing anything with the markets. They just want to watch hockey, although the Leafs are out of the series, so go Penguins. No, little area up here if you want to take it. It's not a great area, not a high probability. I'm going to remove the lines, actually. I don't want to leave the lines on here because I probably won't be taking this one. But for those of you that are looking for something that could be a reversal point, right here could be a little spot. Now, the reason I'm taking mine off is this was formed at 10 o'clock at night, 11 o'clock at night, 9 o'clock, in that area where you don't get huge high probability turning points that are created. Last but certainly not least, Great British Pound. We came into the area, we've bounced out of the area, and we've come back into it again, and we're not really doing anything. So this is a lot like the bond trade. If you're in it, you've got a little bit of profit. You take it wherever you feel comfortable. I don't feel like we're getting a big move out of it like we would need in order to justify staying in it. And so once again, like the bond trade, this may be one that you take and move away from. Japanese yen price came into our area here, blew right through it. So we blew right through the Japanese yen area, did not hold, do not pass go, do not collect $200, totally failed. So as far as looking at what our day looked like, we had just plain stop outs on the Japanese yen, and the Aussie, no doubt. Gold, maybe you got stopped out on, maybe you did not, maybe it's profitable. The S&P and the Nasdaq trades, however, should have wiped out the gains you get from the S&P and the Nasdaq, or the Nasdaq, should have wiped out any of the small losses that you would take on any of those other trades. So just keep that in mind as you're looking at these markets each day. That's the secret. Big winners, small losers. And if you're small losers if you're small losers and your small winners cancel each other out, you allow big winners to go. The key is you don't take big losses, and we should not be taking big losses as long as we maintain our stop losses. So until our weekend edition, I hope everybody has a great Friday. Thank you so much for joining me this week on the Daily Market Commentary. I will see you soon. Thanks, everybody.